Elon Musk just dropped some pretty big news for investors. Elon says coming soon is pure AI vision and auto park. He says your Tesla will take you to your destination and park automatically unless you ask it otherwise. Now that is a big confidence statement from Elon Musk, saying that essentially here soon your Tesla will be able to take you wherever you want automatically and park you in the best possible area. As you know, Tesla knows roughly what FSD is going to look like in 3 to 6 months from now, and I would reckon there is some huge breakthroughs coming for FSD pretty soon. And I think it's important to remember that full self-driving or the robotaxi network is really not baked into Tesla's valuation all too much. I mean, with Tesla stock at $181 per share, are you really valuing robotaxi in that? I don't think so. Now, if robotaxi actually becomes a reality and it's not 5 to 6 years away as Dan Ives believes, that's going to be some big profits for Tesla stock investors. And I have a feeling Elon Musk is trying to rectify his 2018 comp package to get a new package released before you see full self-driving really take that next step in its evolutionary process. Because I would imagine that is probably when Tesla stock is going to be rewarded favorably. Let's face the fact, there is no larger AI project in the world, and likely there will never be another AI project this big in your entire lifetime. Thinking about just purely how important cars are and travel, to revolutionize that, whoever does that is going to be paid handsomely. Not just the CEO, but obviously shareholders. So with a statement like this from Elon Musk, I would be willing to bet my last penny on it, that there's something quite remarkable coming for FSD in the not so distant future. You know, my mom says all the time, the days are long, the years are short. It may seem like it's a while until August, or it's going to be a long time until 2025, 2026. It's going to come very quick. And I do think this is truly one of the last great buy the dip opportunities for Tesla. The markets are missing something that if you watch this channel, you have a huge heads up on. As I said, Dan Ives expects the robotaxi in 5 to 6 years. I think if you had Elon Musk in a room, you know, nobody could listen besides you guys and have a conversation, he would suggest robotaxi is coming a lot sooner than that. I would imagine by the end of next year, you're probably going to see the robotaxi up and operational in at least a few cities where there's already robotaxis like Cruise and Waymo. And that, my friends, is when everything changes from an investor perspective in Tesla. We do have other Tesla stock breaking news as well to cover in this video, including Tesla that has just launched a brand new long-range rear-wheel drive Model Y variant in the US with a starting price of $44,990. That is $37,490, including the federal EV tax credit, with a range of 320 miles. The previous Model Y rear-wheel drive with 260 miles of range has been discontinued. So basically, for an extra $2,000, you gain 60 miles of range. That's pretty substantial. And this is pretty cool. Elon Musk made this post on X that says the 260-mile range Model Ys built over the past several months actually have more range that can be unlocked for $1,500 to $2,000. It gains 40 to 60 miles of range depending on which battery cells you have. He says Tesla is working through regulatory approvals to enable this. So that could be another pretty lucrative source of income for Tesla, depending how many people opt to add this on. That should be directly accretive to bottom line profitability since the vehicles are already sold. A software update, it's got to be 90+% net margins. Tesla is no longer offering mobile service in Newfoundland. LiDAR supplier Luminar Technologies laid off 20% of its staff today amid a new business restructuring. If we take a look at big money option positioning in Tesla over the past week, it was remarkably bullish. I mean, there was some pretty dang bullish days. 90+% of all dollars going into Tesla options from big money. These are hedge funds, institutions, and money managers. Were bullish last week. Now, here are the totals for last week. You had 1,155 different trades, totaling $376.14 million, with a positive order value of 74%. I don't know how long you guys have been around and on this channel, but 74% positive order value for any given week is a very strong week for Tesla options. So it looks like hedge funds, institutions, likely people with more information than we have, are bullish on Tesla stock and think the stock is probably going higher from here. Also see here, if you look at the short position in Tesla, over the last couple of days, there has been an abnormally large amount of shares that are being covered. On Friday, you had 2.2 million shares that were covered and 286,000 shares that were sold short. That is about 1.9 million shares net that were covered on Friday. Now, shorts usually don't like to cover on Tesla short positions. When the short interest rises, it tends to stay high for an extended period of time until shorts get squeezed out of short positions. But right now, someone's definitely trying to reduce their downside exposure in Tesla. Tesla's short interest of free float is 3.85%. You have $19.21 billion currently in short positions. That is down from $20.68 billion at the high as of April 29th. And you do have about 106.72 million shares that are currently sold short. That is up from less than 81 million 3 months ago. So there's a lot of shares that were recently sold short that could be covered on. If you look at the last 6 months, you hit as low as 77 million shares. So you're looking at 25+ million shares that just in the last 6 months have been sold short. There is a lot of fuel on the fire and reasons why Tesla stock could continue higher from here. And an obvious one is the depositioning you've seen in Tesla stock from retail and big money. Heading into Tesla's last earnings, I mean, when Tesla was flushing down into the 140s and then the high 130s, people were selling Tesla. They didn't want to be in Tesla anymore. They wanted to see if they could sell the stock and buy it back at 100, buy it back at 80. There was a lot of crazy low price targets going out there, and that did not happen. So I think a lot of people, as time continues on, are going to want to get back into Tesla stock, and it's going to be at these higher prices, in my opinion. The biggest risk for Tesla stock this year is the economy starting to falter more, the labor market getting weaker, and getting close to some kind of recession. Because remember, the markets price things in ahead of time, so when the markets become fearful that we could enter into recession, that's when stocks take most of the recession beating. And you can just think back to 2022. Everyone thought we were going to go into a recession by mid-year, and then it was the end of the year, and then it was by 2023. At one point, Bloomberg was reporting a 100% chance of a recession in 2023. And what happened? Stocks got utterly destroyed. Then again, it is an election year, so basically everyone in government, the Fed included, even though they're technically not part of the government, is going to look to avoid that. Google Trends data for full self-driving is falling down to 37, considering the trial's pretty much over at this point for most Teslas out on the road. The fact full self-driving is still sitting in the 30s, high 30s at that, over on Google Trends is a pretty good sign. The take rate is higher than it used to be. And if we take a look at Google Trends data for the Tesla lineup, the Cybertruck, Model Y, Model 3, Model S, and Model X, what you've seen recently are very abnormal search trends or search trend data for this time of the year. This time of the year is typically not when you're spiking and reaching multi-year highs for search trend activity. But that has been happening recently, and I believe the first round of the Cybertruck halo effect is likely happening right now. And there's going to be multiple different waves of the halo effect. It's not all just going to happen at once. You're going to get the first round, and then it might die down a little bit, and then you'll get the next round, and then eventually it's just going to be a constant boost to Tesla's business via that halo effect. But if you take a look at Google Trends data right now, the Cybertruck's at 55, the Model Y is at 26, the Model 3 is at 24, the Model S at 11, and the Model X at 9, which is still, even as you are falling, historically very abnormal to be this high this time of the year, suggesting Q2 deliveries are probably looking pretty good. Over on Stocktwits, sentiment for Tesla today is at 58, which is pretty surprising for a Saturday, considering yesterday was 57. The sentiment's actually getting more bullish here on a Saturday. That's pretty unusual. Message volume today is in line with what we typically see. It's falling a little bit. Message volume is low today at 40. Yesterday, it was normal at 45, and the participation ratio is currently at 54. Tesla continues to run about 4,000 different ads with Google. Inventory numbers for the Tesla lineup are remaining pretty constant. The Model Y is going up a little bit to about 6,800, but it's fallen quite a bit from the highs of almost 10,000. So looks like we're reducing some of that inventory for the Model Y. That's good news. Model 3 has been going up. That's actually good as well, because the Model 3 production has been slower than expected in Fremont. So to see this rising is great news. The Model X is kind of just trending downwards at about 2,300 vehicles in inventory, and the Model S down here at about 1,200 vehicles in inventory. The percent of stocks above their 50-day moving average on Friday was up 8.1%. Now, only about 3.5% of stocks broke above their 50-day moving average on Friday. It was a pretty strong day across the board, but not everything participated. It was a lot of concentration in big tech because Apple had better than feared earnings. I don't want to say good earnings because they were not good, but there were certain things like the $110 billion share buyback and the raise to the dividend that investors did like. So Apple really caused big tech to do extremely well on Friday. CNN's Fear and Greed Index is currently sitting at 40. Yesterday you were at 36, and 1 week ago you were at 42. So even though Friday was a great day, markets are still pretty fearful. And here you can see the latest AI investor sentiment survey has bulls at 38.5%, neutral investors at 29%, and bearish investors at 32.5%. On Friday, 10-year Treasury yields dropped about 7.5 basis points, falling under 4.5%, which also helped out stocks quite a bit. And that was really because non-farm payrolls for last month came in at 175,000. The expectation was around 240,000, and the unemployment rate went up 0.1% from 3.8% to 3.9%. You did get some bad news at 10 o'clock in the morning on Friday with ISM services. Specifically, the prices paid component came in about 6 points higher than expectations. The headline number for ISM services came in lower than expected. Services are now officially in contraction, but not prices in the service sector, and that was seen as problematic for stocks. Specifically for the small caps, IWM, the Russell 2000, was only up about 1% on Friday, whereas the NASDAQ was up over 2%, again, largely carried by big tech because Apple had good earnings, or better than feared earnings. So let me know what you think about all of this information down below in the comment section. In the next video, we will be going over a technical breakdown of Tesla, what to expect in this week ahead, and my expectations for Tesla coming soon. Hit the like button, subscribe to the channel. Let me know what you think about this information down below in the comments section. Enjoy the rest of your weekend. By the way, if you guys would like to come trade with us live in real time, check out that link down below in the description of this video. You guys have a great weekend, and I will see you in the next one.